Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 14th, 2016, and today is Thursday morning. So looking at the markets, first on the economic calendar today at 2 p.m. South African time, we have a GBP number coming out. That's a bank rate number. It's an interest rate number that the central bank of UK charges each other. So that's a major interest rate number for the UK. And then at 3:30 South African time, we have a weekly unemployment rate coming out of the USD. It's a weekly number, not as major number as the interest rate decision in the UK, but nevertheless, it is categorized as a major number. Looking at the Euro USD here, we had a big sell-off from our 109.23 level, and then we came down all the way to 108.28 level, and this has been a interesting trading range for us, and we've seen this before. And then, as you can tell, a 108.28, beautiful support level. We jumped right off of it and had a 60 pip move, and you could have bought this yesterday and made some cake. It was a really nice move, and now we're selling off from this 108.79 level to 108.60. So ultimately, the Euro USD still trading in a range, so those guys that are scalping could really take advantage of the market and make some money on short-term trades. Looking at the USD CAD, 143.44, all-time highs, and it doesn't stop. Okay, we keep on going higher and higher. Looking from the beginning of the week, we went from January 5th until now. It's over 100 or 200 pips rather. Since then. So a big depreciation for the Canadian dollar as the USD gets much stronger versus the CAD. This has been going on for almost, I would say, a year and a half, but it's really capitulated just now. As you can see, the green bar is getting bigger and bigger. Does that mean that it's the end of the move? Well, we're not sure. Okay, it's hard to really tell. But looking at the longer-term monthly chart, we have a high of 59.80. So we still have way to go there. So just be careful, not to catch yourself, chasing this too far up, and then finding yourself, having this correct itself. So, book it quickly, get in, get out, buy, sell quickly, and that should be your strategy, because at these levels it's a little bit difficult to say how much further it's going to go. Looking at oil here, oil trading at $30.95 a barrel. We're at all-time lows, and we're closing at our lows, and we're going back to 2003. We haven't been in this level in 13 years. Now the difference between this and 2008 is that it looks like here we're here to stay for a while. Okay, these are major bars, and they're closing down, and they're really closing out their bottoms. Whereas over here we had these major bars, but as you can see, we sold off and then we came right back. So the wicks kind of give me an indication that there's going to be somewhat of a correction. Whereas over here we don't have that. Okay, it's very disconcerting. There's sell-off, and it's a sell-off, and it's done. So the wax part of the candle is still at the bottom of its level and closing at its dead lows. So very disconcerting in terms of oil. Looking at gold, we're bouncing a little bit. We bounced to, as you know, 1108 earlier in the week. We've sold off since then to 1081, which was a previous resistance level here, here, and here. And so that was an anticipated support, and sure enough, we hit it and we bounced right off of it. $10 move, a very easy layup just to pick this spot right here until hit it, trigger a buy order into this level. I would have sold into this 1090 level just to realize it's a nice bounce. Maybe this is a bull flag. Maybe you want to pick it up at 1087 for anticipated rally to 1100 again. So keep an eye on gold. Dow Jones dead on its tracks, trading at 16,137-ish level. We're at support here, so if we maintain it and respect this support, we could definitely bounce off of it. However, if we don't, we could see ourselves going back down to 15,500-ish levels. So, a lot happening in the Dow Jones. It's very disconcerting what's going on in the Dow Jones because, we've had such a great rally up until what was going on in China. So the question is will the U.S. markets shrug off what's going on in China and stay full steam ahead? The fact that the oil is so cheap, that may very well help the markets rebound in the next 6 months. Looking at GBP Japanese yen, we're selling off quite sharply. Remember, GBP has been a bit stronger than the USD in terms of the sell-off. We've seen a sharper sell-off with the GBP Japanese yen than we've seen with the USD Japanese yen. So USD holding a little bit stronger than the GBP Japanese yen. As you can see here, this is the USD. Whereas in the GBP Japanese yen, we've hit a slightly more stronger sell-off. Here we've had a weaker sell-off. So USD holding its own versus the Japanese yen and not giving up. As you know, the Japanese yen has gotten clobbered over the past 2 years. We went from 74 yen per dollar to 123, a big depreciation for the Japanese yen over the past 2 years. We never expected it to happen this fast and this sharp, but honestly speaking, we're getting to a point where we're at resistance level at 123 and we tested it twice, so we're having some sort of correction in the valuation of the Japanese yen. Now, the correction is happening much more sharply, like I said, with the GBP Japanese yen. So, if you're looking to short it, I would go for the GBP Japanese yen. It's the leading indicator, whereas the USD Japanese yen is the lagging indicator. Usually it plays catch up. So if you don't catch it with the GBP Japanese yen, you could always try and trade the USD Japanese yen. Those are the trading thoughts for today. This is Fred Razak at CMTrading. I want to wish you guys a great trading day. Thank you.